You present Kieran.
And now, an even more educated professor. No, I'm really happy to invite Kieran Garvey from University of Cambridge. We have been working together on the Alternative Finance Report, and we were the partners for covering the Nordic region. We are really honored and happy to have them as a partner. Welcome.
Thank you, Rotta. It's really good to be here today, and thank you, Rotta. I'm just really impressed with the level of collaboration that's going on within, across the Nordic region. So really looking forward to working with the Nordic Crowdfunding Alliance going forward. Really excited about what's going to be happening this year within the Cambridge Centre for Alternative Finance, and I'm going to tell you a little bit today about what we've been doing over the past few years. So I'm the Policy Programme Manager at the Cambridge Centre for Alternative Finance, so I'm working with our team on the various different benchmarking reports to really understand how quickly the alternative finance market across all the various different models is growing around the world. And then we're also looking at other different projects as well. So we're looking at new approaches to credit analytics and payment systems. So for example, blockchain and distributed ledger technology. So they're really the three kind of core research themes that we're looking at. So 2013, Brian Zhang, who is the director of the Cambridge Centre for Alternative Finance, he was really one of the first people, if not the first person, to create really credible benchmarking reports to understand this phenomenon, alternative finance, and within that, all the various different models. So we started 2013 and 2014 in partnership with Nesta, which is an organisation in the UK that helps to promote innovation to understand the UK market. In 2015, we then launched, so last year we launched the Moving Mainstream, which was the first report to benchmark the European alternative finance market. And I'd really encourage you to have a look at this report to just get an idea, just building upon what Rotten was saying, just to see how the market is growing across all the various different countries and regions across Europe. This year, I'm really excited about the upcoming report. So myself and the team have just been working on completing the UK report. That's going to be out on the 17th of February. Then in March, we're going to be releasing the first Asia and China reports. China is kind of a bit of a separate market there because truly the levels of volume that are going on within China are truly astonishing. What Rossum said there about roughly kind of $10–15 billion that's taking place in the US, I think you'll all be very surprised at the level of funding, particularly with online lending that's going on in China. It's, well, massive. Asia as well, we've been looking at Southeast Asia, within kind of Korea, Japan, and East Asia, and then also some areas in the Middle East as well to just understand how the sector's growing. The Americas, that will be launched in April, and again, we're going to be coming back to have a look at how the European market has been growing in May. And then also, hopefully this year, we're also going to look at some of the activity that's been taking place across Africa. So we are pretty busy, but as I say, really excited to be sharing those reports with you all, which will be all freely available. So, as Rosam said, we're looking really at four key models here. So donations, rewards, equity, and loans. And within them, there are kind of subcategories within each of those sectors as well. This was a survey, this was a response from a survey that we did early last year, actually in the UK. So I don't know how much this reflects the rest of Europe, but within the UK, something like 58% of people are aware of alternative finance, broadly speaking. However, only 14% of people have actually used one of these platforms. As for businesses, you're looking at something like almost half of businesses have heard of alternative finance, and then 9% have actually used it. Now, if you consider those figures, in particular, the SMEs and the people who have actually used crowdfunding, and then if you reflect on the actual levels of volume of alternative finance within the UK, you can see there's plenty of opportunity here for the market to grow, but already it is pretty substantial within the UK and rapidly growing in other areas within Europe as well. So across 2012 to 2014, across Europe, peer-to-peer consumer lending was the largest sector within alternative finance. So this is where individuals are lending to other individuals using these online platforms. They get a better rate of interest than they would otherwise get if they were saving in banks. The borrowers get a cheaper rate of interest than they otherwise would if they were borrowing from banks or other financial providers. And I guess the key thing there is the speed at which they're able to receive their loans, and also the customer service and the customer experience that they get through these online tech-focused platforms. Rewards-based platforms are the second most common or highest level of volume across Europe. So, as Rotem said, this is where you've got people giving money to particular projects, and in return, they get a non-financial reward as appreciation or gratitude. Peer-to-business lending, this is a very, very interesting area because in the UK, this is now the largest sector of alternative finance by quite some way. And you can see in Europe here, it's one of the fastest growing, if not the fastest growing sector within alternative finance, across Europe growing something like 270% on average between 2012 to 2014. And then equity-based crowdfunding growing at over 100% per year across Europe, and 2014 raised 82.6 million. Now, in terms of our research at the centre, the number of platforms that we were able to survey, looking at something like 65 in the UK, and then we've got kind of Germany, France, the Netherlands, Sweden, Spain. These countries are all, they've got a lot of activity going on. And then I guess across the whole Nordic region, that area is actually the fourth largest market for alternative finance across Europe. And when I say the UK, that there's 65 platforms, actually, even within the UK, there's a massive kind of inequality with how those platforms and also the amount of funds that are being transacted. There's a real kind of breadth with a lot of focus on London and the southeast. So most of the activity is really happening in that financial centre, and it's very unevenly distributed throughout the rest of the UK. Yes, there's some activity in Scotland, around Manchester, in that kind of the Midlands area, but really so much activity is focused on London and the southeast. And a lot of the platforms in the UK are really trying to address that by looking to increase their presence and their branding and their advertising, their marketing throughout the rest of the UK. Overall, across the UK in terms of the total amount that was raised via alternative finance platforms, nearly 3 billion euros in 2014, just over 1.2 billion 2013, almost half a billion in 2012. So you can see pretty rapid growth rates of roughly 146% across those 3 years. So it is definitely a fast-growing area. We've just been doing the benchmarking survey in the UK, and even though the UK is a little bit more developed than elsewhere in Europe, still those growth rates are being maintained. Not exactly to the same level, but still very, very rapid growth. Now you can see here the total volumes of transactions. The UK, something like 2.3 or so billion euros, followed by France, Germany, Sweden, interestingly, Netherlands, Spain, Estonia, Finland. So I think there's definitely some representation from Nordic countries, particularly when you look at the per capita contributions through various different alternative finance providers. So Sweden at number 3, Finland at number 5. So you're looking at kind of 2 of the 5 top countries are actually Nordic-based countries in terms of the contribution that they're making. But as Rotem said, unfortunately, Norway is, well, catching up, let's say. So it's like 0.2 euros. So plenty of opportunity. As you can see, the market is growing really, really quickly. There is a phenomenal amount of opportunity within Norway, but also in partnership with the other countries in the area. And increasingly, we're seeing lots of platforms throughout Europe increasing the amount of cross-border transactions that are going on so that they're able to support projects regardless of where they are in Europe. So I think that's going to be an increasing trend over the coming years. Just briefly, I want to touch on some of the motivations for why people are supporting these various different crowdfunding and alternative finance models. So for rewards-based crowdfunding, these are the top 5 motivations, and I'd really encourage you to read the various different reports to see the other kind of issues that are also of interest. But the quality of the campaign pitch, something like 91% of those surveys say that is the most important thing. So when Rotten was talking about have you got your spelling right, have you got the kind of the right team behind you, how you're presenting your business, do I engender the kind of trust that is going to make you want to support me? This is really some of the key things that are driving interest within rewards-based crowdfunding. But also doing social, environmental good, seeing and feeling your money making a difference and controlling where and to whom your money is directed. So really taking direct control, picking the particular things that you're interested in. This is kind of a major driver of interest within rewards-based campaigns. For equity-based crowdfunding, it's a little bit different, obviously. The fundamental driving force is to make a financial return. People after, I don't know, 3, 5, 7 years want to make an exit. They want to make a multiple return on their investment. So this is a high-risk asset class. In the UK, the regulators have said that basically the platforms have to get the agreement from the investors that they will not invest more than 10% of their investable portfolio in these kinds of assets because they are very risky. At the same time, it's important to diversify your investments, and equity crowdfunding certainly can be part of that and potentially can deliver very, very high returns. So diversifying your portfolio, the way that the platforms make the process of investment extremely easy. Even angel investors and venture capital firms are increasingly looking to equity crowdfunding to see, well, it's a very efficient way to review lots and lots of different companies as opposed to going and meeting the businesses individually over dinner or lunch and trying to understand the entrepreneur. Instead, you can see a list of, I don't know, 10, 20, 30 different opportunities. So you're able to review lots and lots of potential interesting investment opportunities very, very quickly. And then you can follow up with a meeting with those particular companies that you want to find out more about. Again, similarly to rewards-based crowdfunding, it's taking control over where and to whom your investment is going. So really seeing what kind of companies and being able to choose exactly what it is that you're interested in, as opposed to saving your money in a bank that goes and invests it for you or putting it in some kind of investment trust. Again, it's just that disintermediation from yourself to where you're investing or putting your money in order that you can feel your own money making a difference to what it is that you're supporting. And then business lending motivations, again, like equity crowdfunding, surprise, surprise, it is about making a financial return, getting your money back and some. Again, it's about diversifying your portfolio, getting access to new asset classes. I'm not sure what it's like at the moment in Norway, but in the UK, if you save your money in the bank, you're probably going to get something in the region of 0.5% interest, if not more. So in reality, after inflation, you're kind of losing money. So opportunities to diversify and invest in other asset classes is really, really important. Interestingly, investors are also keen to support alternatives to big banks. On the flip side of that, I suppose, is there's an increasing number of banks that are looking to partner with peer-to-business lenders, and we're seeing that increasingly within the UK, and I'm sure the similar trend will emerge across the rest of Europe. So, for example, Metro Bank and Santander are partnering with various different alternative finance providers in order to help the businesses, for example, that they cannot help, so they direct them to those alternative finance providers to help them with their loans, or perhaps if they're a bit earlier stage with their equity crowdfunding, to get them to the point where the bank would then be happy to kind of take them forward as a customer. Or for lenders to help them kind of diversify their assets, being able to point them to their kind of trusted alternative finance providers that they're happy to work with. At the moment, there's an interesting piece of regulation that's been going on for quite some time in the UK to basically almost force banks to direct those businesses which they're not able to provide the loans that they need. And they will direct them to various different alternative finance providers. Something like, these are stats from a couple of years ago, but something like 250,000 businesses are turned down by banks every year for loans that they need to grow and develop. That's 250,000 businesses. I mean, that's a lot of businesses. They are the engines of the economy. And if they're not able to get the finance that they need, they're not going to be able to grow, create more jobs, or perhaps they may even go bankrupt. So I think these kind of alternative finance providers are making a really, really important impact. A few weeks ago before Christmas, Funding Circle, I was reading an article which is one of the leading peer-to-business lenders in the UK, actually ranked as the 3rd largest provider of SME finance behind 2 major banks. So that company was founded in 2009, and it's now, in the 3rd quarter of 2015, was the 3rd largest provider of SME finance. That is, to me, really, really astonishing, the growth rate that has happened there. So finally, I'd just like to leave on a few of these trends. I'm not going to go through all these because I'm sure we're going to have plenty of opportunity to discuss these. But I think increased levels of awareness and participation as crowdfunding and alternative finance platforms develop, they kind of build a crowd and momentum every time that they fund a new business or project. Each of those entrepreneurs are reaching out to their network and kind of bringing them in into the fold of the alternative finance providers. So you get this kind of momentum that builds up, and more people become aware of it. The press picks it up, and basically just awareness is increasing. And then you have the increased participation of the public and the private sector. There's various different examples of this, with local authorities looking to use crowdfunding in order to support local projects, or you have corporates that are exploring how they could provide match funding with crowdfunding and alternative finance providers to fund specific projects that they're interested in, or perhaps for CSR, for corporate social responsibility, and just being able to increase the impact that the crowdfunded funds make with the corporate and the public sector funds as well. In the UK, we're really starting to see more and more institutional investment coming in, particularly within peer-to-business lenders and peer-to-peer consumer lenders. In the US, we're seeing this phenomenon happening a lot more quickly and to a much larger degree, but the UK seems to be going that way as well, to an extent. So perhaps in the rest of Europe, within the peer-to-peer lending market, we're going to see more and more banks and hedge funds and pension funds, etc., basically using those platforms as a way to access a new asset class. Real estate crowdfunding, I think over the coming years, we're going to see more and more of that, both on the equity and the lending side. Certainly in the UK, as you'll see next month when we release the report, this sector is really rapidly growing. I don't know whether that's just going to be a UK phenomenon, because the kind of the housing market there is pretty crazy. I'm sure it's similar in other places in Europe as well. And I suppose, not wanting to leave it on a negative note, but platform failures as well. I think that is going to be a natural reality of the fact that you have however many platforms there are around the world, 1,000, 2,000, 3,000, 4,000, possibly more platforms. And with that number of new businesses entering the market, inevitably there are going to be businesses and platforms that fail. But that is a kind of a natural evolution. On the flip side to that, there are going to be a great number of success stories that go to show that this is a really, really great way to be supporting various different businesses, whether or not that be at the very, very early stage, but all the way up to much later stage companies. And indeed, as the sector evolves, perhaps we're going to be seeing lots of kind of IPOs and businesses raising really, really substantial amounts of money. So I'm going to leave it there and look forward to your questions later on. So thank you.
First of all, you get some chocolates,
but
also maybe we just allow one question because we are really behind schedule. So we'll let the ladies have it today, and
Hi. I'm wondering, given how professional the UK is at this crowdfunding compared to Norway, it's logical to ask if one can take a Norwegian idea through the UK crowdfunding process. So my question is, has it been done? And if not, can it be done?
Okay. I don't know specifically about Norway, but an example that I can think of that just comes to mind there was a fishing company in South Africa, and they provide finance to fishermen to basically buy boats and to get the licensing to do handline fishing. And they created a legal company in the UK through which they were able to raise the investment for a company with basically all their operations in South Africa. And they were able to raise £170,000 or so for their business. So I think definitely it's possible. I think you need to find the right partners, create the right legal structures, but definitely I think London, in particular, it's a great place for doing that. At the same time, it seems a shame that I'm sure there is plenty of potential in Norway to be developing the market here. So yes, I suppose it's kind of a hack. It's a way around the fact that maybe the market hasn't developed here enough yet. So I think in the interim, maybe that would be something to explore. But down the line, there's so much opportunity here. So actually developing the market and the infrastructure, I think, is really important within Norway.
Thank you. Now, maybe we can also leave this presentation with the idea. He didn't mention it, but in the UK we also see these partnerships between platforms and banks, and Santander and RBC, and at least one more.